to growth. Success of an entrepreneur.
We've raised the bar.
Learn firsthand from successful business owners and create your own path to success.
I'm going to show you how great I am.
It's time to hit the road to growth with team lead of the Enriquez Group, Realtor Vinny.
Hi, you Real Growth listeners. Today I had Tyrus Gross. He is a real estate investor and author. Thank you, Tyrus, for being here today.
Thank you, Vinny. Appreciate your time.
So this is definitely interesting. So Tyrus has a background in investing in properties. Yet, we've had on this podcast, of course, all different entrepreneurs, but in the real estate sector, we've had people in the real estate sector. We've had people that are quote unquote flippers. We've had wholesalers on here. Tyrus kind of meshes basically the wholesaler and the investor kind of together. So this is going to definitely be an interesting podcast and probably a little more unique than some of the other ones that have kind of focused on the investing sector. How would you describe yourself, Tyrus, when someone asks you, hey, Tyrus, what do you do?
Well, that's a very good question. Thank you for asking. I flip houses, but I also help other people be successful. So I struggled in the very beginning. I'd been flipping houses for over 30 years and actually started in Los Angeles, California in 1989. The first 6 years were really, really rough. The first person that I was listening to, they said, get the pre-foreclosure list. And, that's the list where people are about to lose their home to foreclosure, and go door knocking. So I went, I got the list. I was door knocking. I actually got into some of those homes and talked to some people, but Vinny, I struggled for months and months and months. I could talk to people, I could get them down a little bit, but I really didn't buy anything. Wasted a lot of time. And then someone said, well, you need to get the REO list, which is real estate owned, right? It's basically when a house has already been foreclosed on, it's gone back to the lender, and you try to buy from the asset manager. You try to buy that after it's already been foreclosed on. And I made a lot of calls, talked to a lot of people, but there again, failed miserably. Again, more months, more time went by. And then someone said, well, you need to do the lease option to purchase method. Long story short, Vinny, I wasted a lot of time. I wasted 6 years of my life. And then I walked into the Los Angeles Real Estate Investors Club. And right inside the door, there was this big table. And there were flyers on it. And some of these flyers were basically wholesale deals. They were wholesalers. They listed the what it was worth, the ARV, the after repair value, what you could buy it for. Basically wholesale deals with wholesale contact information on it. So that changed everything for me because, for example, let's say it's worth $400,000. You can buy it for $300,000. So that was a very big deal for me because I had been wasting all of that time. Then all of a sudden, I found wholesalers, kind of stumbled onto the wholesalers, and I've never looked back since.
Two things. For people listening right now, a wholesaler, it's like what it sounds like. Someone locked up a property under contract, and they're looking to assign it to another person to take it over and actually close on the property. So that's kind of the ideal wholesale in the real estate sector. I'm going to jump back to one thing that I really want to I want to bring back up is the question flipper, right? I've had a bunch of different investors on here, and flippers is kind of the generic term, right? We're flipping a property, buying a property, renovating and reselling it. I had one flipper on the podcast that basically he in his opinion, he said that the word had a negative meaning to it that he thought. And so he basically changed it to I think he was going by, he's not a flipper, he's a renovation.
He's a turner.
It was something like it was something that he's changing the word of it. Have you ever felt that or thought about that for yourself?
You know what? I don't really feel bad about turning or flipping houses because I mean there are some negative connotations to it depending on who you
Yeah.
talk to, but
Yeah.
there are what we do is we're taking over a problem.
Yeah.
We're solving someone's problem, whether it's a bank that has way too many assets on their books because they actually the bank. If you think about a bank, they foreclosed on a house. They have they can get penalized and do get penalized because they have too many non-performing assets on their books. They get penalized. Other scenarios, we save someone from going through a foreclosure. So um, I don't really have a problem flipping or even saying I'm a flipper. I never really had a problem with the term flipper because what we do is we solve problems. It's literally a win-win situation. So
Going back to the wholesaling aspect of it, and when you talked about the idea of 300,000, 400,000 for people listening, those are, I mean, pretty correct numbers for most people that are flipping a property. I mean, maybe, I mean, the margins might be a little bit tighter in this day and age when it might be a little more chaotic, but I mean, you're talking about renovating the property, putting it back in the market, paying those fees. So that's kind of where the kind of numbers jive from. When you did that on the first property, how was that process? I'm guessing pretty stressful because you know how much you have money to play with. Did you have background in construction to kind of know those numbers or?
I didn't have a background in construction, but I had a pretty good idea of what material costs were,
Okay.
and had a couple of friends that were they had some labor folks, people to go in and do the work. But you're right, you have to crunch the numbers.
Mm.
You have to know your numbers. You have to know your material, what your material cost is, your labor cost is. I did well on the first one.
Okay.
Um, but there's always a learning curve. You can always do better. It's
Yeah.
like anything. You the more you do it, the better you get at it. So yeah.
Do you, before you got into the idea of flipping properties, even before that 6 years of the pain that you're working through, what was Tyrus doing before that? Was he in corporate world? Was he? I mean, who was he?
I have an IT background.
Okay.
So and I have an IT degree. So I was basically working full time and trying to get this going part time on the back end, and I was putting in a lot of time. So basically, I was working full time doing the corporate thing and hating it. Well, not hating, hate's a bad word, but strongly disliking working for someone else and knew there had to be a better way. And I had friends that were doing well. So I saw success around me in the real estate market. So I just had a drive, a very serious drive to get out of that corporate world and just flip houses for a living. But it takes a while. It takes time to learn the process, to network with people, figure out who you can trust, who you can't trust, and build success.
And of course you've been in the business for a long period of time, and you talk about who you can trust, who you can't trust. I mean, what have you learned on how to figure out who you can trust and who you can't trust in the time you've been in the business?
Well, we'll take wholesalers as an example. Um, and let's take some numbers. Let's say let's stick with an ARV of $400,000, right? So it's worth 400,000 once you fix it up. And let's say the asking price is, or let's just say the purchase price is 300,000. Well, when it comes to, there's always repairs. So let's say a wholesaler says it's $20,000 in repairs. Well, you need to verify that. And if the wholesaler says there's $20,000 in repairs, well, it needs to be pretty close to that. It shouldn't be 40,000 or 35,000. So there's a trust factor in there. The same way with the ARV. The ARV is based, or the after repair value is based off of sold comps. Well, one way that a non-scrupulous wholesaler can, you know, uh, I don't want to say the wrong word here, but kind of do the wrong thing is they can fudge on the ARV, they can fudge on the repairs. So over time, you figure out who you can trust. If a wholesaler says it's 20,000 repairs, it's 20,000 repairs. If they say it's an ARV of 400,000, then it's an ARV of 400,000. So over time, you figure out who's telling the truth, and you continue to work with those wholesalers. The others, Well, you just politely say goodbye to them. So, and there's a big trust factor there.
And I know we're kind of jumping back and forth at the beginning of the story to kind of what you learn now. I mean, in the 6 years you talked about not getting anywhere. I know it was a part-time gig, a part-time job, right?
Mhm.
But I mean, 6 years of doing most things, right? You're gonna say, well, is this really right for me?
Right. And Vinny, I'm one of these people that I never give up. I'm just very, very, very determined, and I almost gave up because you're right. 6 years of doing something and you don't succeed, like, what am I doing wrong here?
Hmm.
And that is the main reason that I am doing what I'm doing now. I know there are other people out there that are struggling, and I want to help them. There is a better way. Once you find these wholesalers and buy wholesale deals from them, that makes your life a lot easier, a lot more efficient. It basically relieves a lot of the stress and the anxiety. You wind up succeeding, and that's why I'm doing this. I want to help people succeed.
What I mean, what do you think was and you said that you had friends that were at that time that were succeeding in this. Was that the driving force to allow you to keep pushing forward when you were on the edge of actually quitting?
Yes,
Okay.
seeing them succeed. I mean, I knew they were successful. For example, one guy, he had a lot of money to play with. Well, not play with, but invest. And he was buying REOs. But he already knew, here's the thing, he already knew the asset man. He had the cell number of the asset manager. And this guy was investing 20 to 30 million dollars at a time, buying a
Cool.
boatload. So you can succeed buying REOs, but you got to buy in bulk. And sometimes, well, actually almost always, they'll throw the bank or lender will throw in like 10 or 15 don't wanters. They're out in the desert and there's no one around, or they're just really bad houses. So I saw people succeeding, and that, you're right, that was one of the things that kept me going, because I'm like, I know I can do this. I just had to find out what's right for me, because at the time I didn't have 10, $20 million. I didn't have access to that. I needed to buy like one or two at a time. So I
When
had to find
you're
out was
so you have success on the first wholesale opportunity, right? When did you know you're going down the right path?
when I made profit.
So on the first one, you're like, this is the way I'm going to focus on.
Yes, because when you struggle for so long doing one thing, and then you choose a different path, buying from wholesalers in this case, you buy it, you fix it up, and you make money.
Mm.
You're like, okay, this is where I should be. This is what I should do. This is it.
And when, so you knew off the first one, that's the right path for you. When did you start, hey, I got to tell everyone else about this avenue? Was it earlier on or how long after the process?
No, it was a while, because I believed I needed to perfect it. Well, there's nothing that's perfect, but I need to go out and do it again and get better and better and better. So years passed. I continued to flip. I continued, and I moved. Actually, I'm in Austin, Texas right now, and I'm flipping houses in Austin. So when did I come to the point where I was wanting to share with other people? When I actually got pretty good at it, and when I had some time to actually dedicate to this process. So that's where I am right now. I mean, I'm at a point where I don't have to work. Um, I'm very comfortable at this point, and I want to share what I know with other people. So when did I come to that point? Probably about 5 or 6 years ago. That's when I'm like, okay, I want to share with other people what I know, because there are people out there that are struggling. There are some people that don't even realize there are real estate wholesalers out there, and I want to share that information with them.
What does that process look like? So say if someone's listening right now and maybe they're not struggling yet, but they're looking to get into the process of flipping properties. I
Very
mean,
good
but they
question.
don't have a background in construction. They don't have a background in real estate. They don't have any kind of background financial. How do they get started and find the right people to partner up with?
That's a very good question, and thanks for asking, Vinny. Basically, I've got what I call a success path, and there's 5 different legs to it. The first leg is finding wholesalers and buying their wholesale deals. The second is using private lenders to fund these wholesale deals. The third leg, and I'm just kind of briefly going over, and
Yeah.
I'll come back and drill down a little bit in a second. The third is money partners. And money partners, let's go with our example. Let's say the R is 400,000, and you can purchase it for 320, but the lender will only lend 300,000. So you're short 20,000, right? In this case, in this example. So if you're short 20,000, you can bring in a money partner to help you close this deal, and you split the deal on the back end 50-50. The fourth leg is making strategic repairs, not just making any repairs, but strategic repairs based on the neighborhood and the price of the neighborhood. And the fifth leg is selling quickly. Um, and if I could drill down a little bit more, I'd like to. But basically, if you notice that success path, it's from beginning to end, finding the wholesaler, buying the wholesale deal, to closing and have the money wired to your account.
Before you drill down a little farther, just so to catch people up that maybe aren't too familiar with it, the reason the last thing is key that Tyrus says about time frame is because for the most part, this is hard money, right? And they're charging a good amount of money every day that you're working. I mean, for that amount that he's talking about, maybe I mean roughly about $80, $100 a day. I mean, if not more. Or go, sorry.
Right. And when it comes to lenders,
Yeah.
um, there are hard money lenders. And they're basically in charge of someone else's money. You know, that
Yeah.
they know, like, let's say 20 different rich people, and they're uh, lending that money out. So there's hard money lenders. There's a private lender,
Mm.
which is a person that's truly they're lending their own money.
Yeah.
Let's say it's a Tom Cruise, or whoever, someone that's got a lot of money, and you find that private lender and they're lending their own money. And then there's what I refer to as a hybrid lender,
Mm.
which is basically, it's kind of a blend between the two. It's a hard money lender, but that hard money lender is more competitive. So a
Yeah.
hard money lender may charge 4% on the closing, on the points up front, and let's say 12% on the interest. That's a hard money lender. But a hybrid is going to do like 1.25, maybe 1.5% on the
Mm.
closing, on the points, and then maybe 8 or 9 on the actual interest. So I really like the private lenders and also the hybrid lenders. The
Mm.
hard money lenders, I usually don't deal with them because their terms are just, I mean, there's better opportunities out there. There's better products out there.
Yeah. So no, definitely. So I mean, each pillar of this, unless you're using your own money, right? But each pillar of this is so key, and I think that's. I guess it takes to the next point is kind of can you dive a little deeper into finding those right people?
Well, sure. So in terms of the wholesaler, um, I'm kind of skipping over here. I'm kind of skimming over, but when you're dealing with a wholesaler, if you've never dealt with a wholesaler before, they're going to ask you two different questions, at least two different questions. They're going to say, okay, well, how are you going to close? And you need to tell them all cash. And then they'll say, how quickly can you close? You say 7 days or less. And the reason we can pay all cash and close in 7 days or less is because we're using these private lenders or these hybrid lenders. It's not our own money, and it's not B of A or Wells Fargo, any of that stuff. These lenders give us the power to pay all cash and close quickly. So those two questions come up a lot
So,
from wholesalers.
and I'm gonna jump one more time. So sorry about this, Tyra.
Sorry.
The thing you have to think about is with the private lenders, the people that Tyra's talking about, compared to like the Wells Fargo, the banks, right? Wells Fargo and those places are giving you a loan based off of you. The private lender, they're giving a loan based off the property. That's why they can close a lot faster. So sorry.
There's equity in the property. There's different criteria in each property. And Let me just kind of, before I miss this, there's three different markets, generally speaking. There's a buyer's market, there's a seller's market, and there's something in between that. That's like a normal or flat market. So when you're dealing with your first flip, it's important. I say stay in your own city. So if you live in Phoenix, invest in Phoenix. If you live in, I don't know, New York, invest in New York, because you know that market very, very well. And you will know if it's a buyer's market, a seller's market, or a flat market, a normal market. And then based on what market you're in, you plug in the correct wholesale buying criteria for that market. For example, if it's a buyer's market, usually 60 to 65% of the ARV, and again, the ARV is after repair value, it's based on sold comps. So that generally is a wholesale deal, 60 to 65% in a buyer's market. In a seller's market, I'm in Austin, Texas, and this is a hyper seller's market. Well, it's actually more like a seller's market with the Fed doing what they're doing. But a seller's market is usually like 80% of the ARV. And then a flat market or normal market is like 70% of the ARV. So know what market you're in. That's step one. And then step two, know the criteria to plug into that market. And when you do that, when you buy it right, when you go to your wholesaler, you know what a wholesale deal is based on your market. And same way with the lender. You say, let's go back to our example. Let's just say it's an ARV of 400,000. It's we can get it for 320. When the smoke clears into it for 320. So we have $80,000 of profit potential or equity going into this deal. That's the thing that makes the lender more at ease, because we got equity going into this thing. And you're right. It's kind of a long-winded way to get there, but it makes the lender a lot more comfortable when there's equity already going into this deal, with that much equity going into it. And sometimes there's more than that, but it depends on the house and the market. So
Oh, definitely.
any thoughts on that?
What? Yeah, no, for sure. I mean, I think, no, I totally agree with you. So you're getting the message out there. How does your message change from market to market? Because I know on the real estate side, I know it's different than what you're talking about. And in different markets, I mean, different legal issues, different legal items you have to deal with, probably different permits. So is it more of a broad overview of the process and not diving too far into the procedures? Or how does that work when you're providing information to people?
Well, when I provide information to people, I basically tell them to stay where they're at, invest where you are, know your market, because based on your market, that will determine what a wholesale deal is.
Mm-hmm.
So, for example, let's say San Francisco. I don't know what San Francisco is, but let's say it's a seller's market, and let's say the ARV is $1 million. Well, the wholesaler can get it for 800,000, and which fits the criteria. But if you come along and try to buy for 600,000, you've got the wrong criteria. You plug in the wrong wholesale criteria for that market. So the main thing is to know the market, know the wholesale buying criteria, find people you can trust. That's always true. And be somebody that you can trust, or be somebody that people can trust. So always do what you say you're going to do. Even when things go sideways, you say, hey, something came up. It's going to cost more than I thought. But basically, it's just work with people. And over time, you find out the people that you can trust. So my message basically is just get in there, crunch the numbers, talk to people, deal with wholesalers. This method works in any market. That's the cool thing, Vinny. I don't care if it's a seller's market, a buyer's market, or somewhere in between. It works in all markets. You just adjust the criteria.
Well, understanding who you can trust, I think, is key, right? I mean, it
Yes.
sounded like in that 6-year time frame for yourself, right? It was, okay, these numbers don't work out. It's not going to happen. Yet you didn't take the plunge because you had a kind of a steady job into the wrong deal, right? You didn't lose out. It didn't sound like in the wrong deal.
No, I didn't lose out.
Yeah. So someone listening right now that's looking to take the plunge and they're on their first deal, right? How do they know that they're working with the right lender, they're working with the right contractor, they're working with the right wholesaler when they take that plunge?
Well, let's deal with the wholesaler for a second. How do you
Okay.
know you're working with the right wholesaler? Definitely, there's two things you should verify. That is the ARV. You use sold comps to verify the ARV. So if they say the ARV is $400,000 and it's more like 380, well, wait a minute. Right away, I know I can't trust you. So that's one way. So you verify the ARV with the sold comps, and the same way with the rehab estimate. You get really good at the rehab and knowing what things cost. And
A side note on the ARV, right? The after rehab value, for the this is my opinion, for most case, right, you're going to probably resell the property when it's fully done on the open market, on the MLS, probably using some realtor that you know. If you basically throw that carrot out to most realtors of saying, hey, I'm going to relist this with you if it goes forward, they will probably do comps for you
yes,
without you doing it yourself. So you can leverage someone else with the future basically listing.
and it also depends on the state that you're in. Um, I'll look at California and Texas. So when I was out there, I could get the sold comps. I could also go to a realtor, and that person could provide those sold comps. In Texas, there's a law. There's literally a law that it's um, it's coveted information. It's protected. Those sold comps are protected, and I can't get them just going to a title company or going online. I have to use a realtor or an appraiser. So it depends on the state that you're in. Um, so yeah, I mean, the sold comps are very important. It depends on the area that you're in, the state that you're in, but you can flip houses anywhere.
Yeah.
Anyway,
And then what about a contractor? How do you know you have the right contractor?
well, if you don't have any contractors at all, the best the best contract is a referral from a referral. So a referral from a friend. So if you know someone that's already in the business, then you get a referral from that friend. If you don't know anyone, then you call up a realtor. I've done this many times. You call up a realtor because the realtors are already in this business. They know people that they can trust. So in a scenario like that, you say, I'm gonna buy this house. I'm gonna flip it. I need the sold comps. And oh, by the way, if you know any good tile person or floor person, if you can refer me to somebody, so that's another good way to do it because um, realtors are held to a higher standard, as you know. They are licensed by the state, and the vast majority of them are going to be very, very honest people that you can trust. So if you don't know anyone, go to a realtor and ask them who they would recommend.
I thank you so much, Tyrese, for being on the Roach Growth podcast. Before I get into the last question, if someone's listening right now and they're looking to get more information about you, I mean, maybe find other like-minded individuals like yourself, what's the best way of them reaching out?
There's actually two different ways. Zoom, I'm putting them on a Zoom call. It's a free Zoom call. Zoomcall.getthedealsnow.com. And everyone that signs up for that call, what I'm going to do is I'm going to take you by the hand. I'm going to show you exactly how to find these wholesalers in your own city. I'm going to show you multiple ways to find wholesalers in your own city. I'm also going to make sure that you have at least one wholesaler, contact name or name and contact information so that you have a wholesaler in your city. The other thing is Facebook. There's a private Facebook group that I have, and it's facebook.com/groups/getthedealsnow. And when you sign up there, you and I can have a conversation. You can reach out to me. I can reach out to you. We can take it to the next level. But going back to the Zoom call, I just want to make sure that I make sure that I'm crystal clear on this. I'm going to help you find these wholesalers, show you multiple ways to find them. and I'm gonna make sure that. And what is a wholesale deal, right? Our 400,000, 300,000, you buy it for 300,000. We're not talking about chump change here. We're talking about something that moves the needle. So that's the best way to reach out to me. Those two ways.
And then last question. I mean, if you're looking in 5 years from now, I know you don't do as much flipping as you used to. Do you still plan to do flipping in 5 years from now, or do you plan to just strictly focus on coaching, or where do you see yourself in 5 years?
I will always be coaching in some level. As a matter of fact, I've got some local wholesalers that I've got like 10, a little over 10 wholesalers in Austin. And I'm in touch with them. So I'm always going to be flipping houses. And the main reason is I always want to stay plugged in to not only the wholesalers, but the private lenders, because, and the hybrid lenders, things change, right? Markets change, terms change. So I always want to be in there. I don't want to say in the game because it's not a game, in the business. So I can not only know for myself, but know for other people what's, a good thing to do, and good people to hang around.
Well, thank you, Tyrese, for being on the podcast. For everyone listening, I mean, if you're just thinking about looking to get in the business, I mean, it's a pretty straightforward way, right, of knowing what the purchase price is, what basically you can rehab it for, and what you can sell it for. Yes, you want to verify the numbers. Yes, you got to find the right people to do the work. And you have a kind of a rough roadmap of kind of getting there. Now, the margins might not be as great as finding the property off market and kind of doing it yourself, yet you don't have that roadmap. Just like Tyrese did it for 6 years, and mind you, that was back in the day, right? He did it for 6 years and wasn't find a deal. So you can look for the unicorn, or you basically can look for the coins, right? So it's one or the other. More coins in hand compared to one unicorn, it probably makes a difference. So go in the show notes, find Tyrese, get the Zoom. What does it hurt? Have that Zoom meeting, see kind of the information he provides. And thank you guys for listening. Please subscribe, please share, and go find Tyrese. Bye, everyone.